This is Sarah Ponder with Real Wealth Planning. Today I want to show you a short snapshot of what a financial plan looks like for you now and what a retirement analysis would look like. So after we've done a lot of data gathering and had conversations with you and your spouse and your family about your goals, we first have this blueprint that basically just shows what everything looks like right now, what you own, who owns it, and this helps us see if anything needs to be moved around. Then, when we're going into our retirement analysis, what we see on the right is what is most likely to have happened if you kept doing what you were currently doing. On the left is what we expect to have happen if you undergo the changes and the recommendations that we are reviewing. Now, there are lots of things that can happen now and in the future. So they're based on lots of different variables, primarily variables such as when you want to retire, how much you anticipate spending, and how much you would spend now, and of course, how much you save. Generally speaking, our goal over here on the left is to get to about 70% and try to have this number be a good bit higher than zero. So some of the other things that we look at are our cash flows. So this visual helps us see in any given year how much we expect you to earn and spend and where those expenses and where those earnings would come from. There's also a breakdown of it if you want to see the details. And then finally, a stress test. There's a lot of modules within this retirement planning session that we do, but these three, the overview, analysis, the cash flows, and the stress test, are probably the most important. So what the stress test is helping us see what would be the likelihood of your financial plan succeeding in any of these adverse scenarios. So we, of course, don't know if stock markets will drop immediately or if Social Security will be reduced or if inflation will be higher. And so we can change any of these sliders and see how that changes our plan. So the baseline takes our normal assumptions, which are very conservative already, and says that, okay, this family has a 92% chance of success. Now, if the markets were to drop 20% right now this year, that actually doesn't have a big impact. Almost always the thing that has the bigger impact on a future plan is prolonged and recurrent inflation. You can see that brings down the success of the plan more really than anything else, including Social Security getting reduced or anything else. So with that, I hope that this is helpful. If we can help you with financial planning or with anything else, please, of course, reach out to us at realwealthplanning.com.